All right, hey guys, it's Axe. It is Sunday, April 30th, just before noon, and we're looking at the PCRIs. And basically, we got 100, 150 points of selling, and it was quite an interesting week. We knew that OPEX could clear the table a little bit, and it did. And basically, we got an attempt to bounce Monday. We got some blood, and then we thought we were going to get like a breakout of this structure, very similar to what we saw in June of 2022. The setup was there. We've been watching it, but we flattened out a little bit here. And I said, it's starting to fall apart. It's looking more like one of these deals from November 2022 and some other stuff from before that. But I'll get into that in a minute. But anyway, so we sort of had this breakout. The problem is, and we got like a 3 out of 4 sell signal, like right around here. We did get what you could, we got this like bear crossover or bull crossover. I'm sorry, that's bearish for equities. Actually, really, it's about 2 out of 4. Because by the time the sell signal manifested, we were already near the lows. But anyway, so we got a little bit of a sell signal confirmation, but then we spiked to the capitulation zone and then immediately came right back down. So what happens is the capitulation zone means people are like unloading all of their longs. They're freaking out. This is the one. They start shorting. They reverse their positions, all that stuff. Bears think it's the one. They think we're coming down here to 3880 or 4,000. But no. They basically swept the lows real quick and are part of the range here, and then we spiked up, and that forced people who were short to get squeezed. It forced people who are typically bulls that sold to try and get long again, recover their positions, and it created this end of month rally. Now we're back at resistance. We did close. If you look at the SPX chart, weekly chart, I believe, I think we closed our highest weekly close since like August of 2022, which is interesting. But you can see, the indicators aren't done yet. We're still in this bull cross, which is bearish for equities. We're still elevated here. What typically happens, and I'll go back and show you some instances in the past, we could continue to spike here and look into this. I've said before, like this 4260 to 4280 zone could be a target because there's some liquidity to pick up, even higher here, 4380. But what could happen is, we could try and continue to break out here. And this is going to come back down. All this stuff is going to reverse, and then it's going to build up another sell signal. I don't think, we're still pretty elevated here as far as the indicators go. They need to come down a lot further for us to build like a real strong sell signal like we've seen in the past. But in general, I would say we're still in that flat and choppy crap that we have learned to love to hate. The structure is very different than what we saw in June. It's you could argue that it's quite similar to what we saw in January. The challenge is if you see in January, we set a much lower high as we tried to fill this liquidity, and then that began the descent of this whole bear market. Here, we're a little bit higher. And you could say, yeah, we're going to, the same thing could happen. But to me, when the structure starts to change, right, like here was a lower high, here it's a higher high, right? So that means that these higher lows are going to start to print. So yeah, we could sell off and we could come down here to 3880, but what's going to happen there? We're probably going to bounce. And then any bearish action is going to be reduced because the structure is changing, the dynamics of the market are changing, bulls are starting to get a little bit more power, bears are starting to weaken, right? The exception to that would be some sort of major event. But I don't think we have any real risk-off events coming unless the Fed was to do something crazy, and I just don't see that. But anyway, so I've talked about how, we had a setup here, and we did get a little bit of selling, but I maintain the whole time that we are going to get some selling, but it's probably not bearish just because of the way this was setting up, right? I just didn't see any. We didn't get a sell signal, and I didn't see any to be honest, we just didn't sell a lot. We didn't sell enough to really drive any value for bears, and so why are they going to continue to short? I think it was more of a just a bear trap to get some more highs. So anyway, if you look, we're still very similar to what we saw here. And coming out of the COVID lows, the indicators there were elevated. They were chopping around. We were, partial sell signals around here. So to me, that's a very similar structure, and it's a very similar type of event that's occurring. I talked about coming back here to this zone here, December of 2019. You can see very choppy. The indicators were very choppy. We got a little bit of what felt like it could have been selling. But it just kept grinding higher because nothing lined up. Like you realize this is what the importance of getting a 4 out of 4 on the sell signal. Because you can see when we get 2 out of 4, 3 out of 4, we might get something, but you really need all 4 to get the big bang. Another period of time where we sort of chopped like this is coming out of February 19, little spike up here. We saw some mini sells, so they just led to more buying, and eventually, so I could see something like this where we're going to come up here into this 4,400 range, and it could take. I mean, it could take years before we see any kind of real flush. But what I'm seeing here is more of stuff like this, more chop, more of the stuff that just continues to grind up. You can see, look at January 21. The indicators, the difference here is that you can see this is why this top indicator is so important to put call, because it was really down here into the euphoria range. A lot of call buyers when this was happening. And right now we're still stuck up here. So that's why I lean more towards, it's possible we repeat something like we saw in January of 2022. Very similar, and again, I'm just going to scroll this, very similar to August. The difference is this price, it's high. Now, if we reject hard, and maybe that was just an end of month push, things could change. But I still tend to think that for now, we're more apt to see something of what we saw before the bear market. So coming out of COVID, coming out of the taper tantrum, sort of what we saw in this range here, what we saw going into these mini depressions, recessions. In price, not in economy, but so that's where I'm at. I just don't think we're going to watch this here. We're about to combine on the sell line, but again, this indicator's elevated. This one's coming back down, so we have like a 2 out of 4. But we really need the put call to retrace lower if we're going to get any sort of bear positioning established that would set up a sell signal. So what I'm watching is basically, where's this going to go? Are we going to cross back over and come down, and then this is going to break out and keep going higher? Or are we going to go up here and set one more sort of like lower high on the indicators, which would give us a little bit more selling, maybe to come back down to this like 4,100 range and bounce. So for me, we're still buying dips. I don't see anything that's extremely bearish on the indicators. Basically, people are just sitting in the middle. They're not sure whether to be long or short, and so I think that favors bulls until we actually see a full-on sell signal. And those short positions build as price goes higher. Either way, price has to go higher for short positions to build. So I think any downside is going to be limited. I mean, best case scenario, I think 3,900. I'd really like to see like 4K on SPX, but who knows when we're going to get it. So for now, we're just sort of watching this sort of chop fest. It's going to be nasty. It's going to be boring. It's not going to be fun, but I think that's what we can look to expect. So I hope that helps. I know it's a bit all over the place today, and that's mostly just because the indicators are all over the place. And as a result, it's trend continuation. And now we're starting to see what it looks like as things shift from bear market setups to possible bull market setups. See you next time.